When historians describe the rise of modern banking, they usually focus on the Medici of Florence, the merchant houses of Amsterdam, and the emergence of central banks in the 18th century. But the real story, the one that barely appears in financial textbooks, sits buried in monastery archives and sealed family vaults. It began with an older system that shouldn't have existed. In 1743, a young man named Mayer Amschel Rothschild was born in Frankfurt, Germany. By the time of his death in 1812, his family controlled the largest banking network in Europe. The official story claims he built this empire from nothing, rising from a poor Jewish merchant to a financial genius. However, documents tell a different story. Rothschild didn't build a banking system, he took over one that already existed. This network spanned from Portugal to China, with branches in cities that weren't supposed to have sophisticated finance, featuring records that predate the supposed invention of modern banking by centuries. It was the Tartarian banking system, and when the takeover was complete, every trace of the original system was erased from history. The first evidence comes from the architecture itself. In cities across Europe and Asia, buildings identified as banks, courthouses, and government offices share distinctive features. They feature ornate facades with specific repeating symbolic elements, pillars, domes, and geometric patterns that cross cultures and continents. Their interior layouts remain remarkably similar, despite differing national traditions, and their basement vaults extend far deeper than official construction dates suggest. Most significantly, buildings local histories claim were constructed in the 1800s appear in paintings and maps from centuries earlier. The Rothschild banking houses occupied these very structures in Frankfurt, London, Paris, Vienna, and Naples. While they supposedly commissioned them, architectural evidence suggests these buildings existed before the family arrived. They didn't build their empire, they moved into one. The Tartarian banking system operated on principles that modern finance has only recently rediscovered. Documents recovered from a sealed archive in the Ural Mountains describe a network of value houses that operated across the Old World. These value houses functioned as banks with significant differences. They issued standardized certificates backed by physical commodities like gold, silver, and grain. They maintained a communication network that allowed value to be transferred across thousands of miles within days, a capability that supposedly didn't exist until the telegraph. Crucially, they operated on mutual trust with complex protocols for verification, and they charged no interest. The Tartarian system relied on transaction fees and commodity storage, not usury. When the Rothschilds took over, the first thing they introduced was interest-bearing debt, creating the mechanism that has transferred wealth from populations to banking families for 3 centuries. The takeover began in the 1760s. Mayer Amschel Rothschild, working as a dealer in rare coins and antiquities, came into contact with documents describing the old banking network. While official history says he learned banking through the House of Oppenheimer, private correspondence that surfaced briefly in a 1923 auction suggests otherwise. A letter allegedly from Rothschild to his son Nathan states that the old system remained intact beneath the surface, its houses still standing and its vaults still holding their contents. It claimed that what was needed was not construction, but occupation, noting that the families who operated it were scattered or eliminated, leaving the infrastructure awaiting new masters. Following this phase, the Rothschilds rapidly expanded across Europe in a single generation, establishing major houses in 5 capitals simultaneously. Each house was run by one of Mayer's 5 sons, and each immediately accessed a sophisticated financial infrastructure that normally would have taken decades to develop from scratch. The original operators of the Tartarian banking system were known in old documents as the keepers, described as a hereditary hereditary class trained from birth in value management and transfer protocols. They maintained strict neutrality in political conflicts, serving all parties equally. Yet between 1760 and 1815, they vanished from the historical record within a single generation, precisely when the Rothschild network emerged. The Tartarian system was decentralized, with each value house operating independently through protocols rather than hierarchy. There was no central bank or single point of control. The Rothschild system was the exact opposite, centralized, hierarchical, and designed to concentrate control. The 5 Rothschild houses coordinated seamlessly, sharing information across borders and moving capital in concert. This gave them unprecedented power over governments. A nation that threatened Rothschild interests faced a coordinated financial attack. The old system served commerce and provided stability, while the new system accumulated power and made nations dependent on debt. The interest mechanism deserves particular attention. The Tartarian system explicitly prohibited interest on loans for practical reasons, warning that systems based on interest inevitably concentrate wealth until they collapse. They capped storage and transaction fees, ensuring they could not compound. The Rothschild system removed these caps. Debts grew faster than economies, and within a century, European governments owed the network sums they could never repay. By 1815, the family financed both sides of the Napoleonic Wars. By 1900, they controlled central banks across the Western world. Architectural anomalies reinforce this narrative. The vaults beneath Rothschild-associated buildings are deeper and more extensive than stated bank purposes would justify. In London, Paris, and Frankfurt, underground passages and tunnels connect these banking properties. While the official explanation cites security for moving gold, the stonework and dimensions suggest the engineering predates the 19th century buildings above them. The banks were built on top of pre-existing vaults from the previous system. The Napoleonic Wars provided the cover for final consolidation. Between 1803 and 1815, as Europe was consumed by conflict, the Rothschild network provided necessary funding to governments, demanding control of central bank policies, bond markets, and gold reserves in return. During these wars, the last traces of the keepers disappeared. Their records were seized or destroyed, their buildings occupied, and their protocols replaced by Rothschild procedures. The gold reserves that appeared in Rothschild vaults after 1815 far exceeded what could be explained by their documented commercial activities. This unexplained wealth suggests the gold came directly from the seized Tartarian vaults, claimed as Rothschild property with no prior record. This explains why the family's early history is poorly documented and why genealogical records before Mayer Amschel remain thin. The implications extend beyond finance. If the Tartarian system operated successfully without compound interest or centralized control, it proves that an alternative to our debt-driven economy existed. It was destroyed not because it failed, but because it distributed rather than concentrated wealth. The modern banking network of central banks, fiat currency, and infinite debt represents the late stages of this systemic extraction. Today, the family continues to operate with extreme privacy, hiding assets behind layers of corporations and trusts. While fragments of the Tartarian system remain hidden in sealed archives or surviving architecture, the evidence points to a profound historical erasure. Knowing this alternative system existed changes everything, because what was once built can eventually be reclaimed.